and welcome to my channel. For those of you new, my name is Dave and I work in financial services, and these videos are about my journey and development towards financial freedom. They will be about financial products and hopefully improving your financial well-being to reach your aims and objectives moving forwards. Remember, if you like the videos, smash the like button, subscribe to this channel so we can grow and reach a wider audience. Now let's get into this latest video. Somewhat topical, hot off the press, but the Bank of England increased rates yesterday from 0.25% to 0.5% to combat inflation. Second rise in a matter of a few months, but if we look at the following chart, inflation is skyrocketing in the UK, now at 5.4%, highest record for over 10 years. We've had great years of very low rates, very low inflation to try and get the economy back on some kind of track, but do you reckon rates will have to rise about 3 to 4 times this year during 2022 to combat inflation, which is forecast to reach over 7% in the coming months, well above the ONS or the Bank of England target of 2%. Now normally rates are increased to combat inflation or some kind of avoid recession, but this is done obviously because of pressing measures. We've got oil prices $90 a barrel. We had the energy price cap increased yesterday from £1,277 average household to £1,971, increase of £693, 50%. Now, although measures are being put in place, such as a reduced council tax from bands A to D, and also a discount on your fuel later on this year, it'll be about £350, but well below the threshold or the increase of £693. In effect, what does an increase in rates mean for the average person in the street? Well, for most people, the biggest expense is a mortgage, so it will obviously meet increased mortgage costs. Now, if you're on a fixed deal, it's not an issue, your rates will stay the same, but when that term ends, whether it's 6 months, 12 months or 2 years, your interest rate will obviously be at a higher rate. Now, if you're on a standard variable rate, which you reckon is about average rate of about 5%, try and fix that rate. There is no reason why you can get a fixed rate mortgage to below 2%. Save yourself some money. So unless you've got bad credit or a poor history, there is no reason why anybody should be on a standard variable rate. Now they reckon there's 1.1 million people on standard variable rates, and they reckon there's 0.9 million on trackers. Now those on a tracker rate, their mortgage rates will be increased straight away, because the idea is their mortgage rate will track the Bank of England rate plus a percentage. So it may be 0.5% plus 1%. So it will be increased straight away. Quick ballpark of some kind of figures. If you've got a mortgage of say £250, maybe a lot of mortgage, but at average house prices quite easily in this current day, it may well be an increase of £384 a year. And if rates are expected to increase between 3 and 4 times during this year, it may well be on a mortgage of £250,000, it may well be £1,560, equivalent to £130 a month. You will also be affected if you've got some kind of fixed rate savings. So if you've locked your money away for 12 months, 18 months to try and get a better deal from the bank or building society, you will not be given new increases with existing products. So although you may be on a better rate now, your products will stay the same and you will not be given better rates by the banks if they do increase rates. Now, average fixed rates are only about 1.6%. Average instant access rates is about 0.7%. So in effect, you are losing money due to inflation because your increases or your mortgage rates are substantially lower than the current rate of inflation. So it may well be your review where you keep your existing savings. It will also affect people. Vast majority of people have got debt. Debt will become more expensive. Quick ballpark figures. Average overdraft fees are in excess of 30% charged by your banks. Average credit card fees are normally between 20 and 30%. And a standard bank loan, say up to £5,000, it may well be round about 8%. If you've got existing credit, yes, those terms and conditions will apply. But if you're trying to get new credit or increase your credit, you may well be subject to higher fees and charges. One thing you may wish to do is consider reviewing your cheaper existing borrowing. It may well be you get yourself on a 0% credit card or a balance transfer, or speak to your bank about an interest-free overdraft. One thing you may well do to soften the increasing bank rates is make overpayments on your debts. Prioritise higher level of debts to save the levels of interest you are paying. Make them more affordable. Okay, make your money work for you. Okay. Although banks or the Bank of England has increased interest rates, as we found out in the past, the banks are not that quick to actually pass on their rates of increases to customers and savers. As we found out in the past, the last increase was 0.25%. Not all banks have put on that rate, so they may well put it on a lower rate of 0.1%. Now, it may well be done to increase banks' margins, their profits, okay? Or the bank increase made on your savings accounts may not be increased straight away. It may take effect for a few weeks or a few months. So again, you're losing real money in real terms. The banks are under no obligation to increase saving rates. It is solely at their discretion. And then finally, make your money work for you. As we've said, if you've got savings in the bank and it's not reaching inflation rates of 5.4%, in effect, you are losing money. Now, great, keep some money as an emergency for quick access, so an essential emergency fund, but think long term. If you're going to keep large amounts of money in the bank, make it work for you. Invest in the stock market to beat inflation. Average returns in the market are well in excess of 8%. So although inflation is now at 5.4%, it was never that for the past 10 years. So try and make your money work harder for you, beat inflation, to go on, give you some kind of real growth in real terms. Remember, if you like the videos, smash the like button, subscribe to this channel, and we'll see you again soon.